Richard, why don't you tell me about and why you're feeling upbeat about the future at the moment?
Thank you, John. Yes, the report that we've recently issued out on our website, the Material Change Control Report, has indicated substantial reserves which have now been proven on the block. And this enables us to take the field forward into development, to submit a plan to the government for approval, and to develop the core area of our asset. So moving forward, we are in a very strong position now, both technically and commercially, to fulfill the objective of commercialising the Bentley field.
Do you want to just expand a bit more on the RAR report?
Yes, the RAR report was a technical piece of work which we requested Trax to undertake. It was based on reviewing the information that we had prepared following the drilling of the horizontal well and the flow testing of the horizontal well. The results of which, from our perspective, have met entirely our objectives and have now answered the primary question is on technically and the commerciality of the field. We have been able to identify 28 million barrels of 2P reserves in the first stage development, and in the second stage we have 87 million barrels of contingent resources for the core area. The core area is clearly shown in the analyst report or analyst presentation, which is available on our website, and there is a slide indicating the first stage area in a darker green and the second stage development area for the core in a lighter green area. This is part of the entire reservoir, it's not the full area, and if you combined the 2P and the 2C numbers together, there is no technical contingencies remaining on converting the 2C resources to reserves on development approval by DEC and by funding and board approval by the company. So we have an expectation that we will be looking at 115 million barrels of 2P reserves on the field during this year. This de-risks the asset considerably, provides the underpinning for funding and commerciality of the field, and has brought us to a point now where we will be submitting our plans, our final plans, to the government for approval during the summer.
Okay, so the RAR report sounds like quite good news, but how do we explain the gap between those results and market expectations?
There was a growing market expectation throughout the testing program that was focusing very much on the upside prospectivity within the block, and our concentration was to underpin the core area for development. So we haven't carried out further drilling appraisal work on the areas outside the core, and the core area is our primary focus now, and how to bring that into development. So the key issue for that is to get to a point where you have proven reserves, and it's the proven reserve element which is key. The upside prospectivity within the block is no different to that that it has been before and that we have previously reported. So the 200 million barrels, the 160 to 200 million barrels that was in focus for a lot of people, is still there in the 3C area. And of course the numbers that I've just referred to do not include enhanced oil recovery techniques, which have also been referred to by the RAR, and these are something which we're actively investigating now. So, and overall, as part of our development of the block, the Bentley block and the Bentley field, the upside potential will be validated through additional appraisal work, which will be ongoing in parallel with development of the core area. As part of the first stage production, we will of course be planning additional appraisal within the block, which could include seismic reinterpretation, and we'll be planning additional appraisal drilling. Within the RAR report, there is a confirmation that the reserves are anticipated to increase by the conversion of contingent resources to reserves, and prospectivity will be evaluated as an ongoing process of the activity that we have on this field.
Okay, but there still seems to be a significant disconnect between, you know, the net asset value reported in the RAR and your current market cap.
Yes, this issue came up at the AGM, and at the AGM I indicated to investors at the time that as a company we have to focus on the asset value of the company and how to best handle those assets and manage the assets. We're not in control of the share price. It isn't something that we have direct influence over in terms of day to day. We can give updates, we can give information to the investment community on the status of the assets and how we're progressing the assets, and it's up to the investment community to make a judgment on how that should be priced. However, the RAR has indicated that the assets have now reached a valuation of $1.35 billion for the core area alone. This is prior to further appraisal work in the field or additional enhanced oil recovery techniques that we can have on the field. So there is a lot of potential upside on the 1.35, which will come throughout the development of the field. And I think the key issue for the investment community now is to look at the market cap based on the current share price. You'll see that there is something like a 70% discount to net asset value today. That is a substantial discount. It would be more relevant for a company in exploration and very early appraisal to have that level of discount. It would be more typical for a net asset value to market cap to be approaching 1. In other words, the market cap would be approaching the net asset value of the field as you bring it into production. And therefore this is something that management's very aware of. It has a significant impact on the business and how we decide to take the business forward. And we have a substantial number of options to look at either equity funding, debt, or asset funding through asset participation and incentivized contracts with other participants. So these are all things that we will have to assess over the coming weeks as we go forward to bring the field into production.
So what key milestones should shareholders be expecting in coming months?
You will see a change in the news flow. The news flow will go from appraisal work, which we've now completed and undertaken on the block. We're now in project development mode. The key part of that will be DEC approval. Following on from DEC approval will be the ability to convert the contingent resource in the core area to proven reserves and an upgrade to the RAR. Then will be the equipment arriving in the field. We've got the jack-up already on order. The jack-up will be delivered towards the end of this year. We'll then have a floating storage unit in the field, and production will commence during 2012.
Finally, what in your mind are the key factors that are likely to influence shareholder confidence moving forward?
The key factor that people should focus on is that we now have a commercially proven field. We have an experienced management team, we have a strong board, we have a good group of knowledgeable advisors, and we are moving forward into development for 2012. First oil, and there will be a lot of project flow information happening over the next few months. So we see this as an excellent opportunity, and we will keep shareholders fully advised of the progress that we're making on this development.
Richard, thank you.
Okay, thank you, John.